Good evening, everybody. Can everyone see my screen, hear my voice? Do a quick audio visual check. What a fun weekend. Ready to get back to some trading. All right, sounds like we can see it, we can hear it, all good. Let's go ahead and dig in. So, bigger picture. Let's back out a little bit here. We were up at recent highs. We had a sell off, right? We had a bunch of big tech earnings that made us pop and drop and pop and drop in this tight little range. Basically this 4260 to 4400. You might say that's not that tight, but either way, we were up near all-time highs. We had our sell-off. We've pretty much found a nice base and fought our way back to the mean. So we've had our reversion to the mean in what is kind of a bear market. And now we're at a deciding point. Let me zoom in here just to show. This is the 200 daily moving average, the yellow line. The orange is 15, the blue is 8, white 21, purple 50. So, as you can see, we have reverted to the mean, which is the white. We have rejected and slipped back, but not gone past the 200. So, we are at a deciding point on the market and on a lot of names. Do we fight through the mean and start to push back into bullishly stacked and leaned moving averages and start our run back to all-time high, or do we start to reject the daily mean and lose the 200 and start to go back down to retest these recent lows? I always suggest that you should start on a macro view. I chose just a 20-day, but we should kind of look at a large time frame macro view. What does everything look like? So it is worth noting that this is the COVID correction, right? And let me just turn off this drawing set. There we go. So we had our big old COVID correction. And as you can see, pretty much every other correction just stayed above the daily 200. And for most of the last couple of years, we've been doing a pretty good job of holding the daily 50. And every time, let me turn off the Keltners just so we can see it a little better. We've also done a pretty good job of holding this uptrend line on every pullback, hitting it and hitting it, until we fell through it. And when we came back to test it and set new highs, that kind of began this whipsaw action that we've been dealing with and sent us into this new correction phase, which is the first time we've hit the 200 since getting above it after the COVID correction, right? So one might say that this correction is a little larger and a little more impactful than every other correction we've seen over the last year or two, right? All of them would pull back to the daily 50, pop back up, and keep trucking. So, like I've said, we're at a deciding point. And as you can see, from the 200 at 4440, we'll just call it, up to 4600, we have daily moving averages. Now that we're back to the daily mean, it doesn't mean that we have to either pop off of it and rally to all-time high, or drop off of it and go set new lows. We could easily just spend weeks bouncing around these moving averages as they all just get tighter and tighter and more stacked on each other. So we just have to look around and keep an eye on everything, right? But ideally, I'm not going to be biased, right? I'm not going to be biased saying that we have to keep selling off. I feel like a lot of times when folks miss big chunks of a sell-off at the first, pop, their immediate thought is time to start selling off again, right? It all makes sense, right? We got our reversion to the mean. This is the point where we either would start selling off or heading back up, but we could just sit here for a while and kind of shore up all of the liquidity at these daily moving averages before we finally do move off to the downside or off to the upside. So we'll just have to keep an eye on these levels and what the market gives us, right? So we've kind of gone through our macro view. Let's move down to the micro view. We'll go back to a 10-day 30. So we did a good job pushing out of this consolidation and this whipsaw action from earnings, right? We started to push up nicely last week above the moving averages. We got our reversion to the mean, pretty much started Friday, and then we got Monday continuation and arrived ultimately on Tuesday with some of those earnings like Google and Amazon came later, but some of those earnings helped push us up over until we hit a key level or a key zone. I want to highlight this zone because it's very important. And in fact, I'm going to extend it real quick because it's going to be very key moving forward. Why? What is that zone and why is it important? I did kind of show it on the daily, but let's go ahead and go back and check it one more time. Just understanding price action, this level stuck out, and it should stick out to most. If not, as you go through our system more and more, you'll learn how to mark these kinds of levels. But I went back and marked this level based on very key things, and as you can see, we push off of it, we bounce off of it, ultimately we come back and wick it and bounce off of it, we finally get through it, close through it, try to get back above it, can't, sell-off begins, wick it one more time, sell-off, sell-off. Now we're back at it, and we already got our key rejection off of it, at the same time that a trend line from the highs intersects it. So this will be a very important level, this 4600 to 4580. For me, to move bullish, we need to hold around this 4490, which has been a key level, definitely above the 200 to start making the journey to get through this. And I can definitely see us move up and go sideways at it while we build up momentum and energy to get back through. But overall on the daily, since we're here again, I will point out ES has had some pretty strong wicks back up off of these moving averages. Almost like it is setting up to try to move back up. But let's go back to our 10-day 30. Because the point I wanted to make with a nice trend up to that zone and a reversion to the mean, it's very common to hit a zone like that and just do a slow fade back to another recent important zone. So as you can see, our supply and demand tool has called out this 44.46 level. It is a very key level to keep an eye on. We faded back, got a double bottom off of it on Friday to get back to the daily mean at the daily 21, and rejected that with a slow fade. So what I expect for this week is to fade and hit this zone one more time during the cash session, and then we see if we can bounce off this zone, which now the 200 and the daily 15 are occupying that zone. So think of that as a secondary zone, or at least adding more weight to this magnet. I think we stay under this trend line until we hold this zone, and then we pop through the trend line from the highs to go take out 4,600. It's worth noting on ES we are back. It says that we have a 4-hour that fired, but I believe by morning that 4-hour, which is this little cloud up here. Yeah, so our 4-hour squeeze top is in that very important zone between 4,580, 4,600. I believe by morning that 4-hour squeeze will be back, so we will be stacked from 30-minute to 4-hour. And as you can see, the 30-minute and hourly 2-hour are lining right at our liquidity that I just covered. So ultimately, I think we'll follow this trend line from the highs till we hit these squeeze bottoms, and it'll be a great long position. If we ride that trend line down and we can't hold this zone in the daily 200, once 44.32 gives out, then we will definitely see some selling and momentum to the downside. As you can see, I don't have any levels in between these two, because I'm trying to emphasize that once we give out this, we can move pretty fast back down to the levels that provided us the bottom last week, right? And if these levels aren't familiar to you, you need to go back and rewatch a lot of the preps from last week, because we covered all of these levels in the previous week. You know, this lower one set up kind of our reverse head and shoulders. That sent us back up off the lowest low of the week. We came back to test that again. We had these other micro zones in here that helped provide support once the trend got going to get out of this consolidation. And one thing to note on these squeeze clouds, when they're very thick like this, we usually are not going to get through them when we arrive at them. But a little bit of sideways action, and they start to get thinner and thinner and opened up. When they're still there and visible, they're still providing resistance until we get through, but this larger time frame, most likely 4-hour one, opened up, and we started to move up. So firing that squeeze up, but then some sideways and fading action is going to bring it back. So ultimately, I think this downtrend line will keep us until we base at this zone and these liquidities. Who knows, we might not need to go test the 15 or the 200 or this zone. We might be held up by the daily 8, hovering around this very key 44.89, 44.90 to ultimately propel us back through the daily mean and to this key zone up at 4,600. We do have POC right at, looks like 4,500, 4,508. So just slightly above, can propel, basically right in between the daily 8 and the daily 21 is where POC's sitting currently. So could offer us some extra fuel to get through the 21 and back up to these highs from last week. We'll go ahead and move on to NQ. It will be very similar, at least to say we had our reversion to the mean. We are fading back, and we're basically bouncing around these moving averages. For NQ, we have the daily 50 pretty far up above. And we are basically holding up right now to the daily 15, the daily 8, which are down in this zone. We have the 21 and the 200 up above, pretty much centered around 15,000. And then we have the daily 50 up at 15,600 with a little zone or two to get through last week's highs before we get back up to the daily 50. So kind of the same thesis. I think we go sideways and hold up this zone. Maybe get as far as this squeeze bottom, which looks to be a 2-hour squeeze. So we might get stay under this trend line from the highs long enough to hit that squeeze bottom at around 14,445. But ultimately, I think we hold these and start to press back up. Start to press back up to the daily 21, to the top of this 2-hour squeeze to fire it up. We have to get through last week's high in order to get up to the daily 50. But yeah, I'm going to let this 2-hour squeeze kind of guide me, along with the daily 21 and daily 200 above. The daily 15, daily 8, right about where we're at, and the 2-hour squeeze being the bottom of our range that I'll be watching for this week on NQ. As we dig into individual names, Apple, pretty strong off of earnings, has come right back up and gone sideways, not too far underneath all-time high. And as far as tech names go, Apple is still very bullish looking. Jeez, come on. Our daily 200 way below, and we did not have to test it on this sell-off. In fact, it's worth noting if you go back and look at kind of the history of Apple for the last year, we were stuck under 155 most of the year, and then in the fall, finally pushed above 155, and in this sell-off, you can see we barely slipped 155 for a second, and now we've moved up. Right back under all-time high. All of our moving averages are pretty much stacked bullish. This daily 50, it's a little high, but it is aligned with the daily 8, and everything else is pretty much stacked bullish. We are above and bouncing at our daily 21, so Apple, kind of being one of the biggest names weighted in tech, it's trying to lead to the upside, or at least trying to remain strong. If it does give out that 170, 167, then we could definitely see tech roll back to the lows of the sell-off. But as long as we can hold up this liquidity, we can start to push back to all-time high, very much like ES and NQ. I guess I'll at least say specific strikes I'll be watching. Apple is in everything from a 30-minute to a 4-hour squeeze. So I'm going to let these squeeze clouds kind of be my guide for the week. As you can see with the fade and settling near the bottom. And these key levels of 171.30 and 172.11. I could definitely see us retesting those this week and retesting this squeeze bottom before ultimately making the move back up. And dang it, that reminds me, we're only one name in, so before we get too far, one thing I wanted to point out was earnings and news, right? So, earnings this week, we definitely need to keep an eye out. For some of these earnings, we've gotten through most of the big tech names. We do still have a couple to report. NVIDIA won't be this week, it'll be next week. But definitely some big names to keep an eye on this week. Let's just kind of look through here. We have some Pfizer and Peloton, which I know some folks like trading. Some Chipotle, which is always a pretty interesting time. And we got some Lyft and other things. None of these are big names that I'll be watching necessarily. Twilio will be interesting. Uber, Disney. Coca-Cola, A-Firm, Twitter, Datadog. Definitely going to be interesting for ad space. I believe Snap and Pins did well last week, so we should potentially see some interesting moves there. And yeah, that's pretty much it for me as far as what I'm interested in, but there's definitely some other names this week. And so that's earnings. One thing I should also point out, we do have a stock news channel that hopefully everybody is checking in on every once in a while. If you see some big crazy candle on some stock, it's definitely worth coming here to check and see if any news has come out on that stock. Obviously, this is fed by Walter Bloomberg, and I think we also have a live First Squawk in here. But always come in here to check up on news before you start the day, see if there's anything interesting. I know one key point was they're appropriating something like $50 billion for semiconductor manufacturing in the U.S. Here it is. Yeah, it says $52 billion in appropriations for semiconductors is the most urgent part of the bill that they're currently trying to pass. So definitely want to keep an eye on chips as we go into NVIDIA earnings, which will be on the 16th, which is next week, next Wednesday. It will be interesting to see when this bill starts moving its paces through the government. So definitely something to keep an eye on that we want to understand the timing of this bill, along with the timing of when NVIDIA is going to report, because we could see a lot of love come into chips, knowing that there is $52 billion coming from the government to try to bolster some of these companies' abilities to manufacture in the U.S., right? So definitely something to keep an eye on, but also just always check in on this channel, because we do have news flowing through here 24/7. Definitely some Russia stuff we want to keep an eye on. Could affect the market, but we can't be too biased in one direction or the other based on some of these things. We can't think just because there's tensions looming with Russia that the whole market's going to sell off and we're going to war and whatnot. I can tell you, sometimes when we do go to war, some names are going to benefit from that, and so there's always a trade to be had. We'll just have to take what the market gives us. So anyway, Apple, want to see it hold up the daily moving averages. Definitely not go below the 15. But frankly, getting that far is going to fire some of these larger time frame squeezes to the downside, which could carry more momentum with them. So ultimately want to see it hold this squeeze bottom, which always lines up so perfectly with something. Right here's the daily 21 at the bottom of that squeeze cloud. So we could ride this downtrend till we hit the 50, the 21, the squeeze bottom to propel us back up. Let's keep going through some names. AMD had a very strong reaction to earnings. And just like every name last week that had a strong reactions to earnings, you get a big move and then nothing. And basically a wedge. Get a big move up above the daily moving averages and then a slow fade back and settling at them. We now have the 8 and the 15 stacked on each other right at the bottom of this squeeze. We are hugging near the top of this squeeze and hugging the daily 21. Market's down a little after hours. We'll have to see where this opens. I could definitely see it fading to the bottom of the squeeze to these two stacked moving averages to get a good bounce back through the 21 to fire the squeeze up. But those are definitely the levels and range I'll be watching on AMD this week. Squeeze top, squeeze bottom, play them against each other till one side breaks out. Amazon, strong reaction to earnings. I'd say, what do we get? 2740 to 3300. You do the math, but it's a pretty big move. Get out of my way. I'd give anything to get this off my computer. There we go. So ultimately, Amazon, kind of the same story, a big strong reaction. Got a nice secondary pop, but we are in a fade right now. We've got our daily moving averages, so you can probably bet, unless she wants to remain strong and just pop through resistance and set new highs, we're probably going to fade and go sideways at these moving averages before the next big move. Amazon loves to move on a Friday, so I would not be surprised to see us go sideways with some dramatic pops and drops while we settle, but then ultimately make a bigger move Thursday or Friday. So we'll be keeping an eye on calls and puts for those. Back down to this zone and back above the 200 and, all-time highs and whatnot to see what starts to react to beast first. Let's see, we'll skip through to Facebook. Not a very favorable reaction on earnings. I guess we don't have that many Meta fans in the investor pool these days. So definite big old rejection off the 50. Down here and settling. POC has stepped down, although we have started a new month. But ultimately, POC is down here where we are. Frankly, I don't think I'll be putting much focus on Facebook. This is a pretty severe reaction, almost 100 points down on a big name like Facebook. I'd say this is going to be broken for a while. So we'll keep an eye on it. It's going to go sideways until these higher time frame squeezes start to settle in. Looks like we have, a 2 hour starting to settle in. I think we'll get to the 4 hour and the daily before this starts to move in any direction, really. So not a huge focus for me, but definitely not putting data on it, and we'll call anything out as we see it. Right now, it looks like the best play will kind of be from 230 back to 260. We do have, obviously, some levels to deal with in that journey. This 263 is an old POC, so is this 279. So those are kind of my targets for recovery right now, and they're just outside the 2 hour. But again, not a huge focus since it is not favorable at the moment. Whereas Google, much like Apple, much like Amazon, it is looking pretty favorable. Had that big old pop off of earnings, good reaction, and now always everyone should draw a trend line from the highs, right? Because we are going to be in this fade till we break through, and then when we do, we're going to see some interesting moves. So we are nice and bullishly stacked. We got the 8 above the 21. The 15 still lagging a little bit, down with the 200, but hey, sets up incredible zones. Tight little zone here, tight little zone here. Daily 50 that we've already tapped twice and bounced. So let's see where we end up. Ultimately, this trend from the highs is leading us into a potential break on Monday or Tuesday. So let's see if this trend line pushes us down through the 50 to the 21, or if we hold the 50, get through the trend line, and then Google is really back in play. I don't even want to tell you what the 3,000 calls are looking like, but they're interesting. So definitely going to keep an eye on those. It's the top of this, what do we got? 2 hour squeeze right now. Yep, 2 hour squeeze. So definitely going to be keeping an eye up there at the 3,000s. Down here, 2750s to 2800s. As a gauge, again, don't like playing Google to the downside, but just going to keep an eye on those, and as low as the 2700s down here at the daily 200. So Google's definitely one of the main focuses this week. We are through earnings. We are through most of XLC earnings. So we kind of already have good reaction, good guidance, good earnings. My point is focus on the things that did well, maybe not so much focus on the things that did not do well through earnings. Google, let's move on. Not going to cover banks. I'll cover Moderna just for the heck of it. But this stock has definitely been getting beaten up after, what did it used to be at, like 400 or something? Now it's down at, it's kind of like Roku. They both used to be up near 400. Now they're both down near like 150, 160. So not a huge focus. I feel like Moderna's kind of lost all of its fun. Even if you do try to trade it right now, premiums don't move the best. But just to cover it, we have all of our squeezes starting to stack up around 160. So I'd like to see us hold 160 to 162-ish. Looks like we're on a good trajectory to test those. If we break through that and below 158, we could actually accelerate back to these recent lows. But if we can hold up this squeeze bottom, that 158 to 160, we could start to make our journey back up to the squeeze top at 170. Looks like the 2-hour squeeze top is up in this zone around the recent high of 177. And then the daily 21 is up at 183. So not as strong as some of the tech names we just reviewed, but it is hovering near its daily moving averages. Not quite gotten its reversion to the mean yet, so you could see a decent play here. When do they report? Not for 2 weeks. So yeah, you could start to actually see a potential rally into earnings. Microsoft. I'd say another decent reaction to earnings. Looks like it reverted to the mean, but has now fallen back below it. It bounced before it got to the 200 and got back to the daily mean again. So I like Microsoft this week. Looks like this, what are we looking at here? Looks like this 4-hour and, 4-hour squeeze held it up. We have a daily squeeze down below. Let's go ahead and scrunch this so we can see. Ooh, yeah, I like this setup. So it's right in the middle of a daily squeeze. We've got a 2-hour, 4-hour a little tighter to help provide direction. I could see us continue this downtrend from the highs of last week, just like everything else. Settle back into this 300 and the bottom of this lower time frame, 2-hour, 4-hour, holding the 300 level in those squeeze bottoms to fight back through the means, to propel back to the daily 50 and the top of that daily squeeze. So I actually really like this setup for this week. Trying to get this a little better position so you guys can see the levels. There we go. So basically we have our 15 and our 8 setting up a nice zone here from 302 to 305. We could slip as low as 300 to hold up these 2-hour, 4-hour squeeze bottoms. To fight back through liquidity, we got at 302, 305, 308. Resistance also at the highs from last week, and I assume what is the 4-hour squeeze? Yep. So yeah, looks like with our trajectory, hold these squeeze bottoms, reverse, get through that downtrend line, go hit squeeze tops before ultimately trying to test the daily 50 and the daily squeeze top. If we give out this 300, it will be a quick drop to the 294 and 290 daily squeeze bottom. But we're right in the middle. Keep an eye in both directions on those strikes with the beast numbers. Netflix. Proving once again not to counter out. Went down on earnings, but she's fighting right back up. Did not quite get to the daily mean, the white 21. Looks like it got to this key level around 460 and the daily 15 before rejecting and slipping back down lower. Yeah, the 200 is probably up above, way up above. Daily 200 and daily 50 are way up at 550. And we are down at 410. So, ultimately, I am looking for us to hold these squeeze bottoms. If they start to give out, it will be a play from 400 down to about 380, which aligns with kind of where we were a couple of weeks ago, consolidation-wise. But if we can hold these squeeze bottoms in this 400 psych level, we can start to push back up through the daily 8, through these squeezes, and fire them to revisit last week's high, which now aligns with the daily 21, the mean, at around that 460. So, gonna keep an eye on 420s up to 450s, and keep an eye on, yeah, probably 390s down to 370s. NVIDIA reports the 16th, I believe, which is next week. It made that move up with AMD and then slow fade back. Like, hopefully you guys, that is not something new to you and nobody got crushed last week. I know a lot of us said, don't rush in to a big pop after earnings and think it's going to the moon and just buy calls, right? I think, in fact, some of us did hit some of that downside or at least waited for the first pop and caught a nice piece but locked it up quick, right? It's not a swinging environment yet, especially off of a earnings reaction trying to catch that first pop. You don't want to be swinging. So hopefully everybody stayed safe. I know we at least advised to not rush in and buy calls. And yeah, everything's been on a slow fade and settling back to the zone that we ripped through, tested to pop up, come back again to test and hold. So ultimately on NVIDIA, want to see it hold these squeeze bottoms. Let's see. Yep, 4 hour down to 30. So, looking for it to hold no lower than this 230, basically that 235, and this zone around 240. To start making our way to the squeeze top, the daily mean here at 250, and the highs from last week around 260. Still have the daily 200 down below at 224. If we start to lose these zones and give out these squeezes, we've got our target to the downside. But we've kind of seen how all the rest of the chips earnings went. I'm expecting to see similar results from NVIDIA, one of the leaders in chips. We still have the daily 50 up at 280 if we can start to get momentum and get out above, or get up above last week's high. So if this 4 hour squeeze starts to fire up and we get above this 260, 280 is the target. We'll come back to QQQs and SPY at the end. I guess I'll cover shop. I guess I should cover Roku as well. Did they report already? No, they report next week with NVIDIA. Interesting. So, we got our bounce up off the lows of a couple weeks ago. Pretty much back to the daily mean. Kind of tapped it overnight. Rejection back down, but we had Roku had a nice day on Friday and got back above the daily 8 and 15. This is why we cover these levels. They're very important to our system, at least as far as targets, strike selection, all of that. You know, if you're going into a Friday 0 day, all of these premiums are going to be a lot lower, you know, with the theta decay and everything. Let's say you're watching these 150s and you get in on Friday and it's pumping towards 150. What are the targets above? That's why we call out these daily moving averages, these squeeze tops. Don't just think, you know, oh, I need to get to my strike. You got to think, what's the target? Where are we going to? So that's why we call these things out. Look at that. Run up to the daily 8, right in between the two, reject, pull back to VWAP, hold VWAP, right through both of them and into this zone. That is textbook. 2 good trades. You see some strength, you can go long to the squeeze top. You lock, you wait, see what happens at VWAP, and you get another great entry to go long. I cannot tell you how many times I have traded Roku where it has a pop in the first 30 minutes and then it starts a fade and gets picked up at VWAP for another amazing trade. These Friday Rokus, this is bread and butter for trades we've taken in the past with this system. So anyway, actually kind of like Roku this week. Want to see it hold above this 155, 157. We've got our 2 moving averages here, setting a nice zone right below this zone off of the high from 2 weeks ago. So, can we hold this zone, get through the high from 2 weeks ago to go revisit the high from last week and the daily mean, which has now come down to 168, and can provide an accelerant to get through this high from last week. I think we do still have a lot of the higher time frame moving averages like the 50 up above at 200. So yeah, if we can get through 171, the highs from last week, and 180, it could be mission 200 to get back to the daily 50 if Roku wants to have a run going into earnings. So not a bad name to keep an eye on this week. Yes, they've been beat up, but something like earnings, a good earnings report can bring them right back. Kathy will show up and buy every share she can. She will full port that thing. Shop had that nice reaction with Amazon. Before open, it was already back down where it pretty much closed, but had a decent day in sympathy with Amazon, right? Shop, I don't believe has reported yet. Nope, they report next week. So I actually like Shop as well for potential pre-earnings run up after Amazon reported and had a good reaction. You could see Shop run up into earnings and basically have its move before earnings, and then when they report, kind of doesn't do much because they've already done it. So I'm going to keep an eye on Shop and Roku this week along with Google there. I like all those setups. Snow, I think they don't report till March. And we have, what was it, Datadog and, damn it, I gotta pull up earnings again. But the nice thing is, it's in our server, right where we need it to be. We had Datadog, Twitter, Cloudflare, all on Thursday. Oh, I feel like there was another one. Maybe Twilio. But ultimately, we could see some interesting sympathy plays in snow. As those ad companies report this week, those, cloud companies report this week, since that's kind of what snow does, and set up a pre-earnings run. I can tell you this 255.80, this 255 is a very key number. After IPO, it sat here for weeks and weeks before it finally broke 300 and made a quick run up to 400. So I love snow above this 255. It bounced off that on Friday and got a full reversion to the mean from that 255 and these squeeze bottoms up to 281. Geez, hell of a day for snow on Friday. So strong run up. Market falls a little. Strong run up. Could be worth keeping an eye on. There could be some decent plays this week for snow and sympathy with some of these ad and data space names, and could set up a pre-earnings run. So definitely love it above this 255. We got a reversion of the mean. Want to see it hold the 268, 270 level, these two moving averages on this fade back into this week. And yeah, definitely going to be watching everything from 280 up to 300, because 280 being the daily 21. Once we get through that and last week's high, it could be a pretty quick run up to 300. But we do have the daily 200 to keep an eye on there. So snow not bad either. Now let's look at Tesla, and then we'll hit QQQ and SPY and wrap this up. Let's see, Tesla. And I had that earnings reaction, that big old sell-off. Sorry, I'm just trying to kind of refresh myself. Because I know we hit the 950s a few times last week. I'm not sure if any of us hit the downside. I feel like some of us did, the 850s, maybe the 900s. But then we played the 950s again on Thursday and Friday, and they did pretty well off of beast zones. So ultimately, we're back above 900, this 918, which is very key. If we can continue to stay above the daily 8 and that 918 and psychological level of 900, I do like Tesla for full reversion to the mean. Daily 21, which is sitting at 956, top of this zone from last week's high. Looks like the daily 15's at the bottom of that zone that we tapped on Friday. So yeah, we're back in between the 15. Want to see the 8 hold in this 918 to start pushing back through the daily 21 at 955. And we have the daily 50 right up above 1,000. So yeah, I like Tesla this week as well. Nice rally up, a little bit of slip, but pops back. You know, each slip gets bought up, slip, bought up. So definitely looks like she's setting back up to make a run again. Now we'll hit QQQ and shop and call it a night. Feel free to drop anything into the chat into the YouTube chat that you want me to cover, and I will. Just because I'm not checking the Discord chat. But let's see, Q's much like a lot of the names we've covered, and like in Q. At least did push through and got a reversion to the mean. The daily 21 got above a little bit. Now it's slipped back to the daily 8 and 15. Seems to be kind of holding those well. And we have a zone from the high from 2 weeks ago. So I love us to go long above this zone. As you can see after hours right now. Oh, sorry, we're on QQQ. So yeah, want to see us hold 355 and these squeeze bottoms around 350. to start making the journey up to 365, where the 200 and the 21 are pretty stacked on top of each other at the top of the squeeze. And if we can get through that, we can revisit the highs from last week. If the squeezes don't hold, we lose the zone and we fire the squeeze down. Obviously, we're aiming for the consolidation from last week, with the ultimate low being this 334. Go to SPY. And yeah, same story. We're up above the high from 2 weeks ago. Settled into it nicely on Friday for a double bounce. I mean, this should maybe be familiar to most of you guys, but you know, big money makes a move. They push it up, they fire these squeezes, then you get profit taking, usually back to a key level like a moving average, which they're all stacked in this little range. We shore them all up, and then we make the next move. Could be up, could be down, could be sideways. But at least we have our targets. We know what to watch. We have our beasts, so we know when to buy on our specific targets. So yeah, that's kind of what I'm looking at for this week. Want to see SPY hold the squeeze bottom in this zone from the high of 2 weeks ago to start making our journey back up through the moving averages to the high from last week. If this zone gives out, we are falling back to our previous levels. But that is it for prep tonight. Hopefully that was helpful for everybody. I will see you guys in chat tomorrow. I'll likely do a quick morning prep, but this should kind of serve as the longer prep to hit all these names. But yeah, thanks for tuning in. Have a good night. Catch you in the morning.